Hello everyone, Namaskar, good evening. A very warm welcome to you all on behalf of Elan Markets. I hope you're having a great time. So I'm Shananda Dash, I'll be your host today. I'm the mentor in the Elan Markets flagship trading mentorship program. If you have not checked it out, go check it out at Elan Markets page. There you will be able to see me as the Forex and commodity mentor. And with me today, there is Shorodip sir, who is also a TMP Trading Mentorship Program mentor and takes care of the technical analysis part. Welcome, Shorodip sir.
Hi, very thank you, Shananda.
Yeah.
Very
So
good evening to you,
very good
and
evening,
very
sir.
good evening to all the viewers.
This is actually our third edition. We have recently launched this short live. So this is the third edition of this program. And actually, though it is the third edition, just between the second and third, a lot has gone down. And I have written a post, as you can see, in response to a query of a user, which has you must have heard about this SVB, which is the Silicon Valley Bank, which has failed. So this is a post. If you are in a, this is a the screen that you are seeing. This is a stockage social page. This is a niche website dedicated to active trade practitioners. So you are an active trader or even a newcomer, you can come and check this out. But anyway, in this query, let's come to the SVB. SVB is a bank which used to cater to the tech sector, especially life science, tech sector, venture capitalists, crypto, all these niche sector in the Silicon Valley. Their main exposure is into this sector. The problem is, while the bank received a lot of surplus of cash in 2021 during the tech boom, it invested in good quality securities like treasury and mortgage bond. But the problem they did is they did everything there in the long term securities. Now, Federal Reserve is increasing interest rate, and interest rates have been going up. So they are missing out on this. Their interest rate margin is getting squeezed as they're earning. They have done big investments in securities and earning very small interest rate 0.3, whereas deposit rate is steadily going up towards 2.5%. So they squared up their long-term portfolio and incurred a portfolio technical loss in terms of bank accounting loss, which cannot be filled up because the bank's equity capital was 17.5 billion against a loss of 15 billion, and it has made an overall profit of 12 billion. But since the security qualities were good, the Federal Reserve, which is the central bank of the United States, and FDIC, which is the insurance corporation there, they secured the deposits in the bank. So overnight, we saw some rally in the bank. And let's directly come to the market. Allow me to change my screen for just a moment. Okay, what we are looking at is basically US 2 year interest rate, which started turning violently down since after we had this discussion live on Wednesday, and it has fallen, as I can see, from almost 5.08% to still falling. So market has given a significant amount of interest rate cut, where we know the inflation data is getting going to get published tomorrow. So in this regard, I can see the serious drop in the interest rate, which I believe the investors are running towards safety. So this is a safe risk, safe haven trade. But this is coming just before the inflation and in a hawkish Federal Reserve regime. So with this aspect, I would like to take in Shorodip sir, who has been excellent in predicting and analyzing these economic trends. I would like to have sir's view. Sir, it's to you.
No, Shanando, before me coming in, I would like to ask you a question. The question is, see, as we can see, the yields have dropped a lot, right? Now,
Yes.
yields have dropped as you and I were discussing. I think the fall in yields does not necessarily reflect expectation of an interest rate cut at this point of time, right? Because inflation, if we heard that Powell testimony last Tuesday to the Congress, he said that he expect the terminal rate to be higher than earlier expected. So the inflation expectation is pretty high, but at that time the SBV issue did not prop up
Yeah,
in
it is
between.
not there, right, sir?
Yes. So I think the moment the SBV issue actually propped up, people started panicking, thinking that okay, it is out in open, but are there similar landmines in the financial systems? And that is why there was a flight to safety, which actually pulled down the yields rather than what I would say that lowering of inflation expectations. So right now market is disconnected. Market is not connected with the inflation expectation or the interest expectation. I think it is more about a panic reaction which actually can reverse for worse, because because if there is a kind of fear factor that is going on in market, that is pulling down the equities, and people are investing so much into bonds. But if tomorrow Fed, and what do you think the Fed will do if Fed increases the interest rates more than 25 basis points, which looks unlikely after this SVB issue right now? But if Fed becomes a little bit hawkish, in that case, the equities are falling, the bonds will also fall, and also with the fall in bonds, we have bond yields. At that time, if the yields goes up, the bonds will also fall, and possibly then at that point of time, the only safe haven will remain are the precious metal, gold. What we have seen that gold, if I can show you the chart right now,
Let me stop my screen, sir. Yes, you can share, sir.
so So if I can share your screen, so share my screen. So the gold has jumped like anything. Because why? The because the bonds yields have fallen, and that is why the DXY, the dollar index, has actually fallen. You can see the fast rate is falling, and not only that, you can see the here it is comparison to the dollar index, so US 10-year yield. So as the 10-year yield has fallen, similarly the US dollar index is falling, and it has RSI is below 50. I think if uh, 104 is held, 104 is this kind of a support, dollar index would again attempt a rise on the upside, and that will be even more bearish for the market. What do you think?
Yes, I will also agree with your view, sir, because inflation is tomorrow. If inflation does surprise on the upside, yes, definitely there is a risk that the yields can sharply come back, because as sir is saying that this is more of a panic move than actually fundamental or economic based move. It can suddenly come up, and obviously dollar can make a big recovery. And as sir is saying, it would be true even in equities. It would be additional pressure on equities, and in that case we might not get the safety that we are looking from gold. Now, regarding one question, sir, I asked what the Fed is, or the FOMC, Federal Open Market Committee, is going to do. I would like to point out how a market has actually moved violently from since the last Fed meeting of 2nd on February, and from now we have a meeting coming up on 22nd of March. So when the FOMC actually initially announced their decision, and immediately market started pricing a 14% probability that the Fed will probably do nothing in the next meeting. But as we progress, employment report came solid, and inflation was relatively on the higher side, and overall the expectations started moving. And now the market, before this SVB saga, market was pricing almost 50 basis points hike from the coming Fed, that there will be 50 basis points hike, and that with the 70% probability. And since Thursday, last time we made, now it has violently reversed. Now it's almost a coin flip. Like 50% probability market is pricing that Fed will do nothing, and 50% is pricing Fed will do 25. What was my expectation personally? I have been watching the FOMC meeting, every meeting for almost every meeting for last 10 years. And I know the Federal Reserve doesn't act this way, that they will do 25, suddenly in the next meeting they will 50, unless they really want to give some kind of shock. So my expectation has been 25, and so I'll go with the 25 as we progress. So that's my expectation regarding I would like to highlight one trade which is happening right now. Let me share my screen
Sure.
regarding several. Let's have a quick look at the commodity market. What's happening from a long-term perspective? Sir talked about gold, so let me highlight the gold chart. This is the India front month gold. You can see a significant comeback, and the weekly chart is even more interesting. Now we have a hammer versus a shooting star sort of a condition. So unless we see further deterioration in the yield, dollar goes down, gold still might struggle in the zone. But one interesting thing happened today in the foreign exchange market is while overall dollar was sold off and pound recovered sharply. Let me show you the daily chart. Pound recovered more because the GDP data was better in UK. Euro USD, similar picture. You can see came back a lot over the last 3 days. USD JPY was even more violent because of the interest rate move, but USD INR is broadly going up. So market is pricing some kind of risk more towards the emerging market. That's why USD INR could not benefit from this dollar move. Your take, I would like to take Shorodip sir's view on this, what he expects of USD INR in this crisis, especially with we had our own credit event like Adani. So do you see this kind of risk for Indian banks, sir?
See, the factor is that global financial system is a connected wave, okay, and the VC funding, that the VC bubble that was created, and that goes to everywhere. I will like to show you one important thing. See what happened yesterday. This is the US 10-year yield. Weekly chart, you can see the sharp fall from almost 4.08% to almost 3.45 right now. Not only there, you see the UK, which was around 3.9. The UK has fallen to 3.277. Okay. Now, let us look at the Spain. Now, when you go to the Spanish chart, you don't see 3.72 to 3.40. So that not that extent of a move is in the Spanish or Greece uh, 10-year bond yield. So what it clearly shows is that people are this move that has come in the last one or rather 3 days is totally a flight to safety move. This is not an inflation, lowering of inflation. Obviously, other bond yields had a brush off effect, but especially the UK and US has come down. And if I check the Indian government bond yield, see Indian government bond yield has not come down a lot. I would like to show you one more important thing. Okay, uh, so so here you can see I am going to the economic calendar, and in the economic calendar right now uh, I'm going to show you here. Okay, today. So you can see the CPI, Indian CPI. I will like to enlarge it. So you can see that Indian CPI has come above the consensus expectation. Okay.
Expectation.
Yes, so 6.44. So the RBI is also going to hike the interest rates. Okay. A problem in USA does not necessarily mean that Indian Reserve Bank has the luxury to actually push a pedal down on the interest rate hike. So RBI possibly is going to hike its interest rates going forward because inflation remains well above its target range of 4 to 5%. So and one important thing you are right now watching here is that the US 30, that is the Dow, has broken the important level of I will show you the chart. Just a second. I will show you the chart. The Dow has presently broken the important support. It is a delayed chart in trading view. We have a systematic manner.
There is a sound
The
issue. I think I'm hearing Shrodip sir. Your voice is cutting up.
So you can see in this tab that 13,750, 31,750 was important level in Dow. Below that, it can go to 28,700, 800 kind of a level. And if you look at this, the Dow Jones is breaking 31,700. If I would at this point of time want to show you if Nifty breaks below, as Nifty has broken below this important level of 17,250, it is possibly going towards 16,800. And if see 16,800 is a very important level, you can see previous swing high here, then swing
Uh,
low here.
Sir, can't see your Nifty screen. Still, it's down. Yeah, now it's showing Nifty.
So you can see in the last session also, in the last Friday session, post market session also, I was telling that possibly we are heading towards 16,800. Now, if 16,750 kind of level is taken out, that can be a very strong fall, strong, quick fall, because this is a panic driven thing. And due to this panic, we may see that tomorrow Fed not doing anything, but things are right now a jittery. Things are right now in a flux. Okay, so it is a kind of a jittery kind of situation, because if after this every all these things, if tomorrow the inflation data, which is expected 0.4% year on year, core CPI and the core CPI and the normal CPI as a whole if it comes at 0.4% or if it comes a little bit higher than that, then it will be really
Yeah,
jeopardizing
big
situation.
sell-off.
So it can jeopardize the situation tomorrow, you can see. So I would say that right now, in the case of Nifty, if I am coming back to the Nifty tab, 16,800. If Dow really is bearish or tomorrow data comes very bearish in USA, we may reach 16,800. If that is broken, we may have a quick and steep fall. Let me draw the Fibonacci also at this point of time.
Sir, would you
So
zoom the screen, please?
yes, I am zooming the screen. I'm reducing the indicators for right now. So if uh, so I don't need this VWP. I'm not using them. So just removing them. So if I look at this, so 16,576. So these levels, 16,750 to 16,576 can come in a quick time. In the case of Bank Nifty, I will go there. Uh, I will like to show you it is right now at 200 DMA, okay, and it is at 39,556. But possibly this level will get taken out very soon, and possibly if things are like that, because it is a banking kind of a crisis, we may see quick fall towards 37,371. Okay, so for those who are shorting options, especially weekly options, be very careful, because we may see some panic selling, swift fall, and don't have overnight sell position in options. So that is the not the ideal thing to do right now. So this is the scenario right now. Okay, try to trade the market in the short side. If you get that Bank Nifty trading below 39,400, possibly will see a quick fall towards this 37,700 or 38,000. I would like to show a small thing also, that the agri commodities I want to show. See, even though there is a panic, there is dollar weakness, you can see in spite of that the agri commodities are basically falling. So it is a kind of a risk of
Can't
move. I
see
would
the
like
agri
you to more
commodity
focus
charts,
on the
sir, for you.
metals.
It's still Bank Nifty.
Okay, so the agri commodity charts are here. Sorry for that. So you can see that they are actually still
Still,
falling little
yeah,
bit,
still
not as
falling.
much as. So you can see right now.
Yes, yes, sir.
So they are also falling. So it is clearly a risk of move. I want you to take it here with the metal and crude oil discussion right now because they are also having the risk of sentiment right now.
Sir, let's take a question. Someone is asking that is it a crisis? So is it a crisis? You think we are into the crisis already?
A crisis cannot be known while we are in a crisis. See, it can snowball into a crisis, it can resolve within a week. We don't know right now because as long as the Dow Jones stays below 31,700 and for Nifty, for Bank Nifty, if it stays below 39,400 and for Nifty, if it stays below 17,250, I would say we are in a crisis territory. And we have been repeating the same thing again and again. If you remember, we have been repeating the same thing again and again in the Stockage Club, in the
Yeah. In
TMP.
our TMP also, we it's been saying that
Yeah,
this is gonna
TMP is
happen.
our mentorship program, and in the Twitter also, I will show you one post. See, this is the post. This is the Twitter post.
Sir,
Like
we can't
one,
see your post, sir. Please show the
yeah.
post.
So this is the post. 1 month back, 1.5 months back, and we have said that we are heading towards a recession and a bear market in 6 to 7 months. 1.5 months or 2 months have passed since then, and possibly we are heading towards that earlier than expected because it is not only because of the not only because of the higher interest rates, but also because of the kind of systemic issue that it can pose. But if it is handled and market bounce back for a while, also I expect a strong bear market and a reasonable recession to hit the market in next 4 5 months. So that is my view. I would like you to take it over from here and more about the discuss more about the metals and other things,
Yeah, sure.
metals and other industrial commodities.
One thing I'd like to about the recessionary discussion. So yes, we have been warning about this recession because it's quite common, quite natural. Because every time the inflation has gone up, commercial bank has increased the interest rate. Federal Reserve has increased the interest rates. When these three conditions have been made since for the last 70 years, it has been made 12 times, and economy has fallen to recession in the coming how many times? 12. So it is a 100% times it has been hit. So we are seeing this kind of similar structure right now. So we have been warning our TMP students about this crisis situation. This is really not a time to go all out on equity. There is also not a time to panic. Rather, to it's more of a time because we have, as per me, we have not yet come to the panic situation. Because I would love to rely on this because history has shown that this setup has succeeded 100% of the time. It is also true that in the third US presidential year, it's very unlikely market has crashed in the past history. Rather, if recession has come, it has more of it towards the fourth quarter. So my expectation is more towards the late part of the year to recession to happen. But it's really difficult to predict this kind of situation. But we are passing through one. So regarding what opportunities lie there, but before that, let me show you those who have been show you our screen of, if you have missed it, the Trading Mentorship Program page where you can see. Uh, just a moment, please. This is our Elon Markets Trading Mentorship Program. This is me. This is Shorodip sir. This is an extensive program. If you're really serious about financial markets, then only join, because this I will consider as a casual program. This is Elon Markets Milestone Program. So a lot of contents are included. Our new mentor is Abhijit sir. He's a very well-known figure in Indian stock market. So he's our new mentor. We are very pleased to have him. We have Chetan sir, our option master. Vivek sir is obviously there, and finally you arrive at my course, which is the towards the tail end of it. And where it why this part of the course is important, let me show you, because our government has now finally has given some opportunity to the retail participants. If you really understand the risk properly, commodity markets now holds a lot of opportunity with smaller contracts. Aluminium, zinc, copper, crude. Now you can trade in much smaller contracts. 10 barrel of crude oil you can do. Let me show you crude oil. What opportunity lie today, and pretty simple models that we discussed, or pretty advanced model that we discussed through TMP. You could use any one of them, or even your own model to get this kind of trade. See, 6296 currency trading at 6,000. Crude oil big drop towards the lower end of the curve. So it's 300 points, means basically 3,000 rupees, and all you need is just 20,000 rupees to as a margin to trade it, which means quite a sizable gain if you know how to manage the leverage and the other risks. So do commodity markets in the current phase hold lots of opportunity. Crude oil, natural gas. Natural gas we don't yet not have many contracts, but crude, aluminium, zinc, there is. Let's look at, even you can with this availability of these smaller contracts. Let me show you. This is zinc. Zinc, you are seeing lot of since beautiful down move. Simple below the moving averages, momentums varied. This is my proprietary indicator background, name as traffic light. So this is basically showing me which phase it's in. So it's basically bearish phase, bearish big fall. So what I wanted to show you is ATR, average true range, which is measuring the movement. So ATR is about 5.5. So with one contract holding your maximum of risk, say I suppose averagely on 5,500 rupees, which is not really that big to start with. But if you learn to how to do positional trading, then you can significantly get a chance to go for a much longer time frame trade and go a bigger move and earn money. With smaller contracts, this have been made possible. Silver, just look at how silver is going. As we discussed, dollar is down, silver is significantly up, 64,000, 2,000 rupees move. So silver micro we have to trade at smaller contracts. So a lot of opportunity. Try out these try sections of our available instruments that are in the market. Let's look at what's happening with copper. Gold is also we're looking very good on a weekly basis. There will be a good fight is going on. Let me show you once again for those who have missed. Big hammer sort of candle, and it's visible everywhere. Gold mini, you can have mini contracts which are 100, or you can have even smaller contracts, gold guinea. So these are small contracts, pretty simple price action, and looking pretty good. Gold is going to challenge, at least whether it breaks up or not, at least going to challenge the bears in these levels. So it could move in a range, but this is a weekly chart, so shorter time frame will definitely hold opportunities for retail traders. Look, it's a beautiful green colored move, all above the all the moving averages. Crude oil, similarly beautiful move for intraday traders as well. 15 minutes, wonderful red background. We know what to do with red background, red momentum. So I'll recommend try out those who have been only confined themselves to only equity trading in India. Try out different ventures, different side of the market that holds opportunity. Let's look at copper, beautifully going down. We have been, at least I've been highlighting the bearishness in copper. Look at beautiful engulfing of several candles. So you can expect further down move. Problem as a retail trader, please be mindful. There could be volatility. See the move, 15 points. Huh? And copper is not mini, so each contract is 2,500 ton, so it's still a big contract available, but steady down move, beautiful. Aluminium, it was not a really difficult to trade. Aluminium, look at this, as long as you're familiar with price action. Our TMP students first go through Shodudip sir's course, where he takes care of these kind of price action. What are the price action opportunities? Prepare all the basic needs there, and look at these beautiful price action, bearish engulfing, and it was a beautiful downfall from there. So a lot of happening that is happening. Gold is it is international gold heading towards the 1900 level. India gold is more weak because we discussed USD INR has been weak. So USD INR, sorry, INR has been weak. USD INR has been going up. So there it gave a lot of opportunities. So thank you, friends. Thank you for being with us. Let's end. This is our half an hour session. We'll come back again, meet you all again tomorrow. Tomorrow is the yeah. We'll meet again tomorrow and show you how market is reacting.
And
Thank
one
you.
important thing
Yeah,
right
Guru,
now,
would you like to add anything?
yeah, right now, if you see, the SGX Nifty is already showing 60 point down. So there can be opportunity, like those who have carried short positions once 250 were taken out. Possibly there will be good opportunity actually to, uh, if you get around 16,800, you will get good opportunity to book profit. But in Bank Nifty, I think there will be more opportunity to short below 39,400 because it is not so far away from the 200 DMA. So I think for tomorrow, those who are looking for trading opportunities, at least look at the Bank Nifty tomorrow because I think that will provide you better opportunity. And by the end of the day,
But we
market.
can't see your screen. Do you like? Are you sharing the
No,
screen, sir?
no,
Okay.
I'm not sharing the screen. And also remember tomorrow evening the data of US inflation will come. So probably in the second half market can try to uh, try to regain some losing ground. See, this is a catch 22 situation right now we are in. Normally, when there is a recession, generally inflation comes down lower. What you have seen, but last 1 year, 1.5 year, what we are facing is the stagflation. That is the most stickiest and ugliest way of inflation, where growth is actually nominal, but inflation remains high. So this is, and in economic theory, there is no remedy of a stagflation. It auto corrects after giving a pain. Market was hoping that it won't cause pain and actually things would resolve, but pain is has only started coming out. More pain will come out, in my view. So uh, I have told in the past also that have a 18,000 December put, which is right now around 800 watt, and today it was available at 750, 780 kind of level also. I told on last Friday. So buy a 18,000 put and offered of a Nifty which is coming at 7,000, 700, 800. And if you want, if you can sell a 50,000 put, but rather keep it open. Like if you are having a 8 and lakh of portfolio, it comes 4% of your uh, portfolio as a stop loss. And possibly, if market goes down substantially, you will have a great uh, cushion for yourself, great hedge for yourself if you are holding the 18,000 put in the Nifty. Okay, that's it from my side. We will meet again. I will meet you again on Thursday for tomorrow. I think two of our mentors will meet. So let us discuss later. Thank you. See you. Have a great evening and great trading day tomorrow. Thank you. Bye bye.
Bye bye.